I'm very excited to be joined here today by this all-star group of panelists to discuss everyone's favorite subject, regulation. I don't think anyone in this crowd needs to be convinced of the merits of tokenization, although maybe they do. I think I could be. Regulators, of course, are a different matter. It seems like every day we're going further and further away from comprehensive crypto regulation. And I think there's no one better to talk about how to push that conversation forward than my panelists here today. So very excited to hear all of your perspective. I want to start with a very simple question, which is, in the absence of any crypto regulation, at least in the United States, can we move forward with tokenization and mass adoption? And I think for the opening ones, I'll just go down the line. So V, if you want to share your perspective first.
I mean, I think it's going to be really, really hard, especially when you're talking about tokenized real-world assets that implicate the existing financial regulations that we have, right? So if it's something that could be considered a security or a derivative, anything that's regulated, it's going to be really hard to move on to the tokenization of real-world assets and the regulation of that if we can't even figure it out for just regular cryptocurrency tokens, is the short answer.
Yeah, no, I very much share that view. It's funny, I feel very much at home when I start talking, like people start leaving, usually in my house, my wife and my kids, so this is like perfect. So yeah, no, I totally agree. I think, look, what we hear from our clients at TRM, financial institutions, crypto businesses, is that just having some clarity about what the expectations are, what is the speed limit as we start to drive, is in some respects more important than ultimately what the regulation says. So I think that clarity is just an incredibly important piece to move things forward. I do believe we're seeing significant innovation in the space without it, but I think to see that true adoption at both sort of that retail and institutional level, we're going to need rules of the road.
Yeah, and to elaborate on that, right? It's like tokenization is such a broad use case. So you can tokenize real estate, or you can tokenize real world goods, or you could tokenize securities, right? And the question then becomes, what rule set applies? Do we have the clarity that we need to understand which rule set applies? And then do we need additional regulation, right? Either to create that clarity or to control for some risk that may be unaddressed. And so I am hopeful we'll get there in the United States context. I think that was part of the question. We view, at Fireblocks, we view stablecoins as a form of tokenization. And so, there obviously is some legislation pending in Congress, and that could potentially be interesting.
So I'm going to take a bit of the contrary view, actually, which is for regulated financial products that are tokenized, I think we can move forward in the absence of comprehensive crypto regulation because people are doing it now already. Franklin Templeton has projects coming out. Lots of other large financial institutions do it. And what they do is they go to their primary regulator, SEC, CFTC, and they go get permission to do it. But it's in a permissioned way. And so the question is, and right, tokenized deposits, that is happening at every major bank, whether we want that to happen or not, it's all in a permissioned way, and there's no way to get around it being permissioned right now. And one of the greatest innovations, in fact, probably the greatest innovation about blockchain technology, is the permissionless nature, because it makes things more efficient and it takes out some of the problems that we've seen inherent in the traditional financial system. So the real hurdle is we probably won't be able to get to a permissionless way to deal with tokenized off-chain assets, what everyone here is calling real-world assets, without there being more comprehensive regulation.
If I could just add to what you said, Rebecca, I think you're 100% right that some of these projects are moving forward. There is clarity. What I think is interesting, though, is that I think once you accept that, there are also market infrastructure issues that are raised, and we talked about this earlier with the transfer agent issue in the securities context. You run into a legacy way of offering products that has market infrastructure designed for legacy products, not tokenized products.
Yeah. And so, like, by bringing in brokers to deal with crypto exchanges when you don't need to use them now, you're just creating the same things we've had before, and you can make sure that there are actually really good consumer protection, market integrity, financial stability, illicit finance type of regulations in place without necessarily having to bring in all the old intermediaries that we've seen before. But you have to do really hard work the regulators, really more legislators, have to do the really hard work to figure out what that means.
And I'm glad you brought that up, because when I talk to projects that are doing tokenization of real world assets, it does seem like the only corner of crypto where people say, yeah, there actually is a path toward registration with the SEC, at least for some of the security tokens. Maybe Prometheum is a different area of that, but we don't have to get into Prometheum. But it does seem like there is that pathway, at least in the US, that could function if regulation doesn't happen, or at least doesn't happen in the next few years, or takes a few years to implement. So I mean,
one thing just real quick that I think is sort of important in this context, and it's why this panel is so, I think, so many different perspectives, but regulation is not just one thing. I think in this country, we're sort of bogged down that when we think about policy or regulation, it's CFTC, SEC, is it a commodity, is it security? And it's really, I mean, Rebecca just went through it, I thought, really nicely in like 2 seconds, but it's like, it's all of these things, right? It's the issues around commodities, securities, it's the illicit finance stuff that we focus on, the anti-money laundering, and environmental, and a host of other, stablecoin reserves, all the issues around that. There's so many aspects to this. So it's not just this one thing that I think that is just such the focus of everyone today.
Well, I'm glad you brought that up, because I wanted to ask about that, which is, I mean, I know you're in DC and you're involved in a lot of these conversations around regulation. Do you think there's another bill or path that could come first rather than stablecoins or market structure? It seems like AML has been top of mind for a lot of senators, at least right now.
Yeah, it's interesting. Look, so I think yes to the AML has become a focus, especially recently. I think the reason stablecoins has been so interesting over the last few years is it does take a pretty discrete piece of the overall sort of crypto ecosystem and really focuses on that. And it's honestly a piece where there's a lot of agreement between stablecoin issuers and policymakers. So in theory, it's easier. Well, nothing's easy in the US Congress, so we haven't gotten there yet, but I think it's sort of a little easier. I think, AML has always been very easy in the crypto space because the focus has been on centralized exchanges, and they are highly regulated today. We talk about regulatory clarity. There is regulatory clarity there. If you are a crypto exchange, you're required to have anti-money laundering. You're required to use tools like TRM to have policies and procedures. Where this gets much more interesting is how to do sort of anti-money laundering, how to do compliance in a decentralized world. And that's a lot of the conversations that Rebecca and I and others are in today. And I think that's sort of an open question. I think there are tech solutions to it that we don't need over-regulation, but that's the conversation that's happening now. And I think I'm hopeful that policymakers will listen to technologists around this.
Rebecca, as maybe the ambassador for DeFi on this panel.
Yay!
Do you worry that it seems like AML legislation right now is the one that's moving the fastest?
It seems like it's moving the fastest, but what I can say, and I'm sure Ari can speak to this too, and probably everybody on this panel, which is there's actually real engagement with industry going on behind the scenes to find a workable solution. So a lot of the things that we see today are probably not what we'll see ending up at the end of the road for what makes sense. And I think if it actually allows for a path forward for DeFi in a permissionless way, like permission DeFi isn't DeFi, in a permissionless way where you are actually putting in crypto native tools and other types of risk mitigation procedures, then I'm all for it. And so I think I'm not worried about it moving forward the most quickly, as long as there continues to be meaningful engagement, because saying whoever holds a certain amount of governance tokens is responsible for BSA compliance, it just that's not even what the BSA is really meant to do.
And just really quickly on AML, because I know we'll move along. Look, the reason we're all here is because we believe in the power of the technology, right? This idea of cross-border value transfer at the speed of the internet. But the reality is, who else likes cross-border value transfer at the speed of the internet? Bad guys who can move illicit funds. So really, what my message to policymakers is, but we can now uniquely follow those funds in ways that we never could before in traditional finance. I was a prosecutor investigating cases with shell companies and networks of hawalas and high-value art, right? There are no TRM for those things. So what we need to do is use the technology, use those native qualities of blockchains to investigate cases and to have regulators and policymakers understand that, like, hey, there's technology that solves some of this today. AML is a use case. Rebecca famously collects use cases. AML should be on top of that list. You know, AML is a use case for blockchain technology. It is not a bug.
I just wanted to add one quick thing on the illicit finance, AML, KYC point. I mean, I think one thing that I notice a lot with the industry, and obviously not everyone is guilty of this, but I do think as an industry, we need to take concerns around illicit finance and national security really seriously, right? I think it's not enough to say, oh, it's, you know, less than 1% of all crypto transactions. Yeah, that's true, but there's some really bad hacks and high profile things that are happening. I mean, there's a lot of evidence that North Korea is using hacked crypto, laundering it to finance its like nuclear weapons program. I mean, these are things that lawmakers are understandably concerned about. And I think as an industry, by not taking those concerns seriously, you know, we lose a lot of credibility. So that's the first thing. But I do think, you know, one thing that we talk to policymakers a lot about, and I'm sure everyone on this panel, you know, has been doing this, is there are a lot of technologies like Ari just alluded to. I don't know, you know, where they are. Like there's R&D happening, you know, it's an area that we invest in and that we do research in as a fund at Bain. Things like zero knowledge cryptography and secure multi-party computation, homomorphic encryption. All of these technologies are things that people are doing a lot of work on right now. And, you know, presenting these as alternatives to our existing form of compliance, AML, KYC regimes, which I think we would all agree, you know, is seriously flawed for privacy reasons, security reasons, et cetera. You know, continuing to engage and educate lawmakers on that instead of, you know, their inclination, I think, is always to impose what they know and what they've been using for traditional finance and for highly intermediated systems. Like, you know, their impulse is to impose that on blockchain and on DeFi, and obviously that doesn't work. And so I think continuing to have those conversations, but also taking their concerns seriously is really important for us as an industry.
And I think you can't only talk about what we're gonna do in the future, but you have to roll up with like real things that can happen now, even if they're a little uncomfortable for the industry, right? Like I definitely give a lot of ideas out there that are as close to true to the permissionless, decentralized nature, you know, also including privacy, but they might be a little uncomfortable for us. And so if we want to move forward, we need to be able to meet them somewhere, right? Maybe you don't go 90 and they come 10, but you at least have to come like 40 or 50.
To Rebecca's point, right? It's like I think the industry is misunderstood sometimes. I don't think anyone on this stage would push back on the policy objective of KYC AML, right? I don't think anyone would like stand up here and say we're for terrorist financing. You know, I think like the industry is fairly well united behind that as a goal. The issue we've had is how do we go about doing that, and where technology has been cast as being part of the problem, we see it as the solution. And so we are coming with, as Rebecca said, you know, a ton of ideas right now, and Ari's company is bringing, you know, technology solutions to the table. So I think it's worth drawing that distinction. You know, we support the policy objective, I think 100%. I think the industry is very much united behind that. It's just making sure we get the tech right and the rules for its deployment right.
And I don't want to make this an entirely AML panel, although
we totally
should.
Yeah.
But I had one more question, and I think it shifts into the idea of decentralization. And I promised I wouldn't ask too much about Tornado Cash, but I do think it's a salient example where obviously every single agency now in the US seems to start testing the waters with DeFi and whether decentralization can actually exist. And I remember I spoke with a federal prosecutor, a former federal prosecutor around Tornado Cash. Ari, maybe you have a different view, but they basically said there will never be an instance where regulators will say a platform can be fully decentralized and no one will be held liable if it is being used for illicit means. So I'm curious from all your perspective, if you do think there's a world where at least regulators in the United States will allow a platform, or will say that a platform is fully decentralized and can operate as such.
Was I that former prosecutor?
You were not.
Okay. Because I do agree with that statement, whether we like it or not. And I think where regulators, where law enforcement, where policymakers need to really thread a needle right now is, look, we have to stop North Korea from attacking the crypto ecosystem and being able to launder funds and then using those funds. I mean, I think everyone agrees with that. But at the same time, in a more and more open financial system, we need to allow lawful users to engage with privacy-enhancing tools, right? Like no one wants their financial transactions on out in the open for everyone to see. So the question is, how do we stop North Korea from taking advantage of services like Tornado Cash and others, but at the same time allow lawful users? And I'm hopeful that's where the conversations are, and we started down that road a minute ago with some of the tech solutions to that. But I do agree with that statement. Look, I don't think there's any kind of financial service that North Korea could launder, $1 billion through and not have regulators and law enforcement, fully engaged there. And I think that, one thing we talk a fair amount about, but could probably be a lot better about as an industry, is doing a lot of this work ourselves. What can we build? How can we share information, right? We've never lived in a world where anyone can follow transactions in an open way like this. How do we leverage that technology? We run a open source website called Chain Abuse. It's like ways for crypto frauds and scams, right? How can people share information? They can report to law enforcement. There are ways that we could do this as an industry. I don't know if we stop, North Korea from laundering, $2 billion over the last 5 years, but I think it's a really good start. It's a good way to engage with regulators.
I have lots of feelings about this, but I think the statement that regulators don't want to let it happen where there's not like a super identifiable person is right. We just saw the IOSCO DeFi guidance come out, and the whole thing is about like, you got to find someone who's responsible. What I do believe is that approach is not consistent with the law, not just in the US, but in any country. You hold the people responsible who are actually responsible. Like that's tort law, that's contract law, that's just like baseline level law that whoever is responsible must be held responsible. And so creating software on its own, if it's truly permissionless, and I think the industry also needs to be really honest with itself, that like there are people involved in a number of smart contract-based arrangements that may actually have legal obligations, even if you don't feel like that's true. So holding a multi-sig and having complete control over billions of dollars probably doesn't absolve you of some form of responsibility. That doesn't mean you're a broker-dealer necessarily or anything specific under the securities laws, but we do have to really think about where responsibility comes from and what that looks like. And there are a lot of corollaries in law and more like in civil law, like are you a trustee, are you, those types of things, and imposing those types of regulations. But you only hold people responsible for what they do in the law. So, and I think we really have to make that part clear. And then I think in terms of what Ari was saying, that there are people who you can hold responsible in the system. I'm sorry we can't find, the Lazarus Group and do something specific, but they don't only use blockchain-based technology for a lot. I know they do in disproportionate amounts, or certainly lots of people in the industry and regulators have liked to have pointed that out. And maybe in banks, if they're using the bank too, the bank will get sanctioned and things like that. If there are people with knowledge, right? And I know it's a strict liability scheme, but like it doesn't work the way people are talking about it now necessarily in the sanction space. So I do think there's nuance we have to place on top of all of this.
No, I mean, this panel would be better if we disagreed more, but like, I think that's right. And there's not enough conversation around the way North Korea was acting pre-crypto, pre-blockchains, right? Like Bank of Bangladesh, Sony Pictures, jackpotting ATM machines all over the world, right? Ransomware attacks and attacks on, critical infrastructure in the UK and all over the world, right? Like this has been going on for a long time. They're just opportunists. And if we can be better at shutting down some of those on and off ramps for them, making it harder, for making the opportunities harder, I think that's a good place to start.
I mean, on the shutting down, sorry, I know you want to go, but on the shutting down area, what Ari and I have spent a lot of time on is maybe US exchanges are better at shutting it down, but there is so much that goes on offshore. And so US regulators need to look at what tools they have to maybe trace things offshore as well. Sorry, Jason.
I was trying to compliment you, honestly. You've cut me off.
She makes it hard.
Sorry.
No, Rebecca, as usual, said like 10 amazing things. And I just wanted to pick up on one, which is this question of is it sufficiently decentralized enough, right? It's a policy question when you think about it. And Rebecca mentioned tort law, and I was just reflecting on tort law, right? There's always a scoping question in tort law, right? So something terrible can happen to you, but it's too attenuated in causation for the law to agree that the causal factor all the way down the chain is can be held responsible. And so, but this is a policy decision, and this is an arbitrary line, and this is what you learned in the first year of law school, right? And so we've been making these calls for hundreds of years, and I think we can figure it out in the DeFi context. But as a factual question, right? Yes, DeFi is decentralized. As a policy question, we'll see where we draw the line.
I think that policymakers, though, we've seen it consistently happen both in the US and outside to say, well, we don't know what DeFi really is. And so they bring all sorts of things, including points of centralization, in to say, well, this is DeFi too, because it's just, like Iosko said, it's just financial services using blockchain. And I'm like, well, I'm sorry for every bank then, because banks provide financial services using blockchain too. So now they're captured in this very overbroad definition. But I do think if we continue on this tort law path, we're going to lose everyone else who didn't leave at the beginning of this panel too.
I don't have anything to add except that you just gave me really bad flashbacks to tort law in law school. So thanks.
I was going to say it's my new goal for every panel to have the line, I was reflecting on tort law at some point worked in. But so I think someone brought up Franklin Templeton. You're seeing a lot of TradFi firms entering the tokenized asset space, or they were already there. Obviously, Citi made a big announcement yesterday. I'm curious from all of your perspectives, whether you think it's bullish that all these TradFi firms are now going fully into crypto or crypto-like products. Will it wash out the crypto industry? What are the upsides and the downsides of that? V, maybe you want to go first?
Yeah, I mean, like Rebecca said earlier, I think most, if not all of the experimentation that you're seeing in TradFi is with permissioned systems, which I think is fine. I mean, I obviously, all of us believe in a future where permissionless blockchains continue to be something that regulators are open to. But I think there's always going to be a place for both. And hopefully, as we see more, not just TradFi, right, but also just consumer companies like Nike and Starbucks also experimenting with different forms of tokenization. The more, I think, mainstream experimentation and adoption that we see, my hope and my expectation is that the regulators will become more open-minded to the technology overall, including permissionless experimentation and systems.
I can't say any better. I mean, it's awesome. I mean, ultimately we want is adoption, mass adoption of this technology and use cases for it, and to have financial institutions that are inherently conservative, we're starting to see them sort of dive in, maybe without some of the clarity that we started talking about. I think it's a great sign for the space, and we'll see more of it. So much. We didn't even, PayPal issued a stablecoin this summer, right? I mean, that they have the reach of 450 million users on their platform. I mean, these are the kinds of things that we can start to see those, I think, really real moments in this space.
Yeah, at Fireblocks, we're very pro mass adoption. We're very pro financial institution adoption. We have Bank of New York Mellon as a customer running Fireblocks, so that's all great. My view is probably a little bit more nuanced, right? So I was at a conference and we had one of the big banks, the global head of blockchain, and he described his vision where there was an internal blockchain-based ledger, and the 5 other big global banks had it, and they just traded with each other on internal blockchains. And I was a little queasy in the room, I'll be honest about that. But all that said, I think this industry is new, it's maturing, and it's the same for adoption at the bank level. And so I think overall it's a good thing to have them engaging with the technology.
I think what's so interesting is 12 to 18 months ago, we all talked about the barriers to mass adoption being regulation and institutional adoption. And we said, well, the institutions won't come in until we have clear regulation. And the institutions have clearly just thrown up their hands and said, okay, we're just going to figure this out while we're waiting for this to come forward. And I think there's also a note to be taken from history, not to be the most boring person on this panel between tort law and FinReg history, but the way that our financial regulations have been built to date are not that you had these great economists and professors sitting around saying what's the right way to build financial regulation? No, it's that the financial system's built up and then the regulation built around that, whether it be in the CEA, the Exchange Act, all of these types of things. And so I think we're going to see the same thing. So as all of this continues to be built out, the regulation will get built around it. I do think V's point, which people don't talk enough about, and it's actually really important in the off-chain real-world asset context too, is the consumer-based applications, which I think are going to be huge pushes for mass adoption, because it is Nike and Reddit and Pepsi and Coke and the NFL and every big soccer club, and all of these types of industries are looking at their consumer-facing applications. And I think the interoperability that will come from those types of apps will also push things forward. And people are really figuring out how to tokenize consumer-facing off-chain assets and make them really important in the financial and economic sphere too. So whereas you were constrained with what you could use as collateral in the past, I don't think that will be true 5 to 10 years now because of tokenization of off-chain assets in a consumer-facing context.
Yeah, so I agree with all of that. I just wanted to add one more thing. I mean, one area or one way in which I think the participation and interest from TradFi and from fintechs and consumer companies, one way that it does help to move the needle on regulation. I mean, I think I haven't been in crypto as long as Rebecca and some of these other folks, but for a while, I do think it felt like as an industry, we were sort of on an island, fighting for ourselves, fighting for the regulations that we thought made sense to preserve this technology and this new asset class. But as you see more TradFi, fintech, consumer company interest in this, they start to weigh in on a lot of the regulatory and policy debates, right? So Grayscale obviously was the original filer for an ETF, but now you have all these TradFi companies filing these ETF applications. They're submitting comments on things that presumably only, on SEC rules that presumably only, or that we assumed only impacted the crypto industry, right? They're submitting comment letters saying they are interested in offering crypto custody services, or they have an issue with SAB 121, the accounting rule that says you have to maintain a certain amount of capital for custody or for crypto that you custody on behalf of customers. So the more I think they're weighing in on these regulatory conversations, and it's not just the crypto native industry doing it, the more that's going to help to move the needle on regulations.
And I do want to ask, I know we're at a summit on real world assets. I heard Robert Leshner say in the last panel that the form of tokenization or even crypto that has the widest use case right now is stablecoins, and specifically the tokenization of US dollars. And when I hear people in the crypto industry talk about how great it is that all these TradFi firms are moving in, or the fact that the most successful use case so far has been a US dollar-backed stablecoin, is there an irony there that that's the direction that crypto is moving forward? I know all of you are probably not Bitcoin maxis, but probably still believe in that ethos of decentralization. So, I mean, do you see some irony there that that's where we're going in the industry?
I just don't think that means that the industry is inherently centralized, right? I mean, stablecoins are ubiquitous in DeFi, and I think one of the most important policy things that we can ensure moves forward is that stablecoins can continue to be used in permissionless settings. So I understand sort of the point about the irony, but I don't think, and I do think points of centralization have to be examined very carefully when they interact with permissionless systems. But I don't think that means necessarily that we're moving forward only in a permissioned or centralized environment. I'm on my own island out here.
Jason, any thoughts?
Because I thought the irony was that in a world where you have Bitcoin and it has an inherent value as a digital asset, that you would move to a payments system that has to be that derives its value from being backed by specie or fiat.
I think that the just boom of Ethereum makes Bitcoin the same as USD in that context, right? Because you have to wrap the Bitcoin to make it work. So you always still have a centralized actor when it comes to Bitcoin then to wrap it to make it work in a DeFi or an Ethereum-based system. And so I think because Ethereum has become what it has and this world computer or whatever we want to call it, that's where the difficulty on thinking about Bitcoin versus USDC or something like that comes in.
Yeah, I mean, I think Rebecca makes a great point about look, stablecoins solve a huge problem in DeFi today, right? They allow us to transact in ways you never could with what has been a relatively unstable asset. So I think it allows a lot more activity in DeFi. So I think that's one really important point. Off your question slightly, another argument for stablecoins that I've made to policymakers who care about different things than DeFi is, look, when you look around the world, 99% of stablecoins today are tied to the US dollar. That is an incredible source of US sort of, soft power in the world. I testified a year or so ago for the House Financial Services Committee, and this is the question they asked, like, is crypto a problem for US dollar hegemony? And I didn't point to a CBDC. I didn't point to, our trade, US trade. I pointed to the fact that 99% of stablecoins are tied to US dollars. So if you're having conversations with policymakers, to me, it's a pretty strong argument about how technology can actually export US values as opposed to sort of the other way around.
Yeah, and I take another angle on it too, right? So I'm excited about stablecoins because I think they're a great vector for mass adoption, right? I mean, at the retail level. I think about web environments, video game environments where people are transacting in stablecoins, which can settle 24/7 and can move cross-border. So, you pay in one currency and you pay out to your friend across the world in another. So I just think they're really great vehicles to get people using digital assets, and I think that's kind of part of the problem right now.
I just want to push back a little bit, and I understand the argument that there are use cases for it that transcend centralization, but at the same time, if one of the main arguments you're making to lawmakers now is that one of the great functions for crypto is increasing the soft power of the United States, obviously...
Only I was making that argument.
But it seems like that is a tension that's on stage and is existing within the crypto industry right now. So I'm just interested how you navigate those conversations, or if you think this will be a wedge issue moving forward.
To key off that question into something Ari said, where he was like, well, they don't care about DeFi that much. To be clear, every regulator in the world, international, state level, all local level, cares about DeFi. And if everybody thought it was this whole little thing that you could push to the side, you would not have everyone so obsessed with it. Like every time I read an IOSCO paper or an FSB paper, I'm like, why are you so obsessed with me? Like just sort of that comes out with it, because there is obviously some power to this ecosystem, especially if we can achieve it in a truly permissioned way. That too, I think sort of Ari alluded to having discussions with policymakers where they've said is crypto a threat to government hegemony, which comes through state-backed fiat currency. I've had those discussions abroad, not in the United States. And I think there is concern over it for sure. And so people do understand there is great power here that scares governments, which they may not even be aware of, underpins a lot of their regulatory concerns, many of which are valid too. National security is really important. Of course, we need to shut down North Korea. Consumer protection, honestly, is super important. It should be the lowest bar for us to jump over. And people are so afraid that they will get kicked or have their consumer protection efforts used against them, because we've seen regulators do that it's just not happening. And so I think Dia said this in an area we could be doing so much more as an industry in the absence of regulation, but because the environment in the US has been so hostile, probably fueled by some deep-seated skepticism and concern about what crypto can really do to the balance of power, we haven't seen a lot of the efforts that we need to see. I took this in a totally different direction than your question. I'm sorry.
It's an interesting direction. I would say, if there's some takeaway from some of what we're talking about today, it is what you just described is exactly what we've been seeing over the last few years, right? There was a laser focused on how do you regulate a centralized crypto ecosystem, right? What are you going to do with centralized exchanges? And for the most part, with MiCA and even sort of the way it's handled in the US today, a lot of that is solved. So what you see now over the last year, 18 months, 2 years maybe, is every regulator in the world now has moved on to, hey, how do we regulate in an actually decentralized space? And those are where the conversations that are happening. I think they're sort of interesting conversations, and it's every aspect, right? It's AML, it's consumer protection, it's all of it.
So we don't have too much time left, and I want to end on maybe a slightly optimistic note. I know all of you travel the world a lot, meet with regulators across the globe. I'm curious from each of you, not only which regulators you think are maybe doing the best job or leading the pack globally, but are there specific policies that you've seen implemented that you think have been really successful? Jason, do you want to start off?
Listen, I'll tell you what I think we need more attention on, which is custody and wallet providers. We continue to see hacks. We continue to see vulnerabilities. It's too important a part of the ecosystem especially on the retail, especially on the institutional level if you want to build a business, but of course also on the retail level. So the conversations we want to have, and there are places around the world where they're very open to having them, are focused around custody and how do we create standards, operational risk controls, etc., for custody solution providers.
So I think one thing that's really unfortunate about where we are in the US when it comes to crypto regulation is like, we just really have not, unlike most of the rest of the world, we have not moved past this question of, does crypto need like tailored, unique regulations? I mean, the answer is obviously yes. The rest of the world quickly realized that. We are just not even past that yet. So one big missed opportunity, I think, because we haven't gotten past that point is, there are a lot of risks, like unique risks to crypto, that need to be addressed, right, by any regulations that we eventually adopt. And I was thinking about this, like in terms of just, in the context of like just crypto, right, like cryptocurrencies. I mean, you have things like the loss of private keys and hacks and attacks and, settlement finality obviously has a lot of benefits, but there are challenges associated with that, right? Like you can't reverse transactions that were sent by mistake or were a result of fraud or crime and things like that. All of those types of risks that we should be thinking about and that regulators should be thinking about, all of those things are only going to be more pronounced when you're talking about real world assets, where it's not just the token anymore, it's a token that's tethered to like a real world asset. And so my hope is that in the US, we get past that question so that we can actually start thinking about regulations that can address those really, those real risks that exist and are only going to be magnified when it comes to real world asset tokenization.
It's a great point. I think flows into what I was going to say pretty nicely. In that I'm in Brussels next week and I'm going to meet with European policymakers, and they will say exactly this, right? Like we can't get over ourselves on like one question: who's going to regulate, right? We can't even get there to how to regulate. Whereas they have created a comprehensive framework for how to regulate the space. And I will tell you that I'll hear from them all the time that they consider a huge business advantage over the United States in this new financial system. Crypto businesses are going to come here because they know the speed limit. They know how to drive. And I think that is significant. And to me, we need sound policymaking, but in some respects, we just need rules of the road. And that's what businesses would say today. And we're starting to see jurisdictions like Singapore, like UAE, like Europe say, hey, come here because we can tell you exactly what the speed limit is.
I agree with what everybody said. There was a week, maybe 5 or 6 months ago, where policymakers around the world each said to me, like, what are you guys doing? One EU policymaker said to me, I don't understand why the US is so afraid of permissionless ledgers. Like, that's literally how he put it. And when you put it like that, it just sounds sort of ridiculous, but I do think almost everybody else in the world is doing a great job. Yes, we have something really solid to point to with MiCA, but the UK put out a great framework. Not perfect, but nobody's is going to be perfect. Japan has had real regulations in place for centralized crypto asset exchanges for a long time. Super restrictive to the point where some centralized exchanges have left recently, but they also have had stablecoin legislation around. They just opened it up to have USD-backed stablecoins. The proliferation of crypto in Asia, and I think what people have not been talking about, but this has been happening quietly for the last year, but definitely the last 6 to 9 months more earnestly, is that there's a lot of proliferation in Africa too, and we will see a lot coming out of there, including like proposed regulation and things like that. Like, the rest of the world has gotten on board areas, right, that everybody sees and seems to understand that this is going to be a major way that the economy drives forward. For anybody in this audience who has children who are into video games and stuff like that, and just has, access and ability to use electronics, whether you allow them to or not, this is the way it's going to move forward in a major way. And so I do think it's really important, one, that the U.S. sort of gets sort of on the train, as everybody sort of alluded to. And two, that we really focus on some form of standardization, because I think it is going to be hard to comply in a very complex technological world. But on the flip side, there are lots of different financial regulations all over the world now, and everybody has seemed to figure out how to do it. It just may be more complex when you have a permissionless system.
NBA Top Shot is the gateway drug in our house for crypto adoption.
Until the SEC comes in, maybe.
Until it's a security.
Well, unfortunately, that's all the time we have, but thank you everyone for joining us today, and thank you to my panelists. It's been great.